In smart money, the most important rule that you must follow regarding your trade is that by riding the trend, you can have a better deal. Collection phase, public movement phase, distribution phase. The accumulation phase usually occurs after heavy selling. A sharp sell-off in the market has left many market participants and investors frustrated, killing any hope of an uptrend. The price has decreased drastically and reached its lowest level. But buyers are still hesitating about buying trades because the fear of selling and falling again is always there. At this time, smart money enters the market. As a result, the market enters an upward phase after a long price range and extreme disappointment of investors. In the stage of general upward movement, the price quickly and strongly takes on the upward phase. Many people have exited the market in the accumulation phase, and investors are excited and people are mesmerized by the market's returns. And everyone from analysts to the public see higher levels ahead. The next phase is the distribution phase, which is very similar to the accumulation phase, but it occurs at the peak of the price. In the distribution phase, whenever the price tries to go higher, smart money stops it. And over a period of time, this happens several times, and this creates a strong resistance level. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. How is the structure change in smart money? In this section, we are going to discuss what is the structure change in smart money. Talk. Choco pattern, which stands for change of character, means change of structure. This means that the pattern has a steady and upward trend, and after some time the pattern changes and reverses its trend. This pattern is formed due to the entry of smart money into the market and causes a change in the situation. There is another pattern called boss. In this pattern, you can also see signs of the arrival of smart money. Boss stands for break of structure. This pattern means that in an upward trend, a ceiling will be broken, or in a downward trend, the resistances that exist in the floor will be broken. In this case, this pattern is formed. These two patterns are important patterns for entering smart money. But the difference between this pattern and the Choch pattern is that in this pattern, the upward trend becomes downward, and the upward nature of the market changes. But in BOS, at the same time as the market goes up or down, new ceilings or floors are broken. But it should be kept in mind that in both patterns we can see signs of the entry of smart money. This smart money causes the ceilings to be broken, or the nature and trend of the market to change. The twin roof pattern is formed after an uptrend. Actually, after an uptrend, a downtrend is formed, and after the downtrend, it forms a double bottom. Investors buy in these conditions and set their loss limit below the twin bottom. This is where smart money comes in and takes the price slightly below the twin bottom so that the price hits the stop plus of many retail investors. After that, it pushes the price up. In fact, when the price reached the level of losses for retail investors, big investors buy it from small investors. Liquidity in the twin roof. The twin floor pattern is the opposite of the twin ceiling pattern. After a descent, an ascent occurs and a twin ceiling is formed. At such a point, investors expect a decline and open a sell position. But this is where smart money comes in. Contrary to investors' expectations, the price has risen again and many investors are hit by stop loss. Finally, the path of price movement will be downward again. The things that you need to know during the liquidation discussion is that if the price reaches our support or resistance, how do we know to break it or hit it? If it completely breaks that area, it should be broken with a body. If it breaks and continues with the body, and during pullback we can enter the position and continue. In such cases, sometimes the price comes from the bottom, it collects the stops, then it continues to move, but when the price should break the level once, here is the important point. If it breaks with one and goes up during the pullback, you can go down 100% because the most important part is that the price could not break with the body. And with the break, the reason why it went up is to gather the stops and come down. Pay close attention to this issue. If it comes down with one collision, it will break on the third collision when killing 60%. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.